Google is so much more than we think, because it is not only search, maps, Gmail, Android, Google Play and Chrome. This is only the Google ecosystem, but actually Google has a parent company called Alphabet. And this ecosystem is a very substantial but only a part of the business, because Alphabet owns over 200 different companies. And some of the most important ones are Fitbit, which is a company that makes wearable fitness devices, Looker, which is a business intelligence software and data analytics, Nest, which makes smart home products, Waze, which is a mobile navigation app, and there is of course YouTube. And if you're watching this video, then you probably know what YouTube is. And just recently Google announced that they bought Mandiant, which is a cybersecurity and cyber defense company. So if we are buying Google, we are actually buying the whole Alphabet ecosystem. We are buying over 200 companies. So let's see who is buying Google right now. So investors, insider buys, that's an X. There are actually no insider buys right now. And what about super investors? That's a check. There are a lot of different super investors that buy Google, but it actually gets a little more complicated than that, because Google has three kinds of shares. There is Class A shares, which every share has one voting right. There is Class B shares. In this case, every share gets 10 voting rights, but they are only for the founders and insiders. They cannot be traded publicly. And there is Class C shares, which have no voting rights. And if we look at the investors right now, we can see that a lot of them are invested in Class A and Class C at the same time. And there are a number of investors that are buying and a number of them that are selling. But there is one particular investor that is really interesting, and that is Li Lu. And in this quarter, he really invested big in Alphabet. And I made a whole video about Li Lu's portfolio, so if you want to check it out, there is a link in the description below. And we have to understand that it's not only that, a lot of investors are investing. This is the most bought company in the last quarter by super investors. So let's try to find out why they are buying. Let's look at the fundamentals. First of all, return on invested capital. That's a check. The return on average for the last 10 years is 15.2%, which is really good, because we are looking for a return over 10%. And Google is such a massive company that the fact that they are growing that much, that they have such a great return on invested capital, is actually really surprising. What about free cash flow growth? That is also a check, and it's even bigger than the return on invested capital. It's 19.7, which is absolutely exceptional. Okay, what about shares buyback? That's also a check. In the last 10 years, they bought back almost 2% of their shares. So that's really nice. And what about dividend yield? That is an X. Google currently is not paying any dividends. And the reason for that is that they are investing all the cash flow into the company. They are acquiring other companies. They are growing. So the money that they could put into dividends is put into the growth of the company. Okay, and what about the debt? That's a check. They could pay their debt in a matter of months with their current free cash flow. Fundamentals look really great. So let's try to value Google. And for that, we will use a discounted cash flow formula. And we will have to estimate the growth of the company for the next 5 and then another 5 years. And we will make 3 assumptions. A low one in which we think that the company is not going to do that well, a medium one in which we believe that it's going to do quite okay, and a high one in which we believe that it is going to do really, really well. So in the low scenario, the first 5 years, let's say the growth will be 12% and then 10%. In the medium scenario, 15% and then 15%. And in the high scenario, first 5 years, 18% growth and then 15% growth. And it may seem that those numbers are too high, that are not conservative enough. But actually, if we look at the history of growth of Google, well, it is absolutely doable with no problem. Okay, so let's see the valuation. So the intrinsic value should be somewhere between $126 per share and $188 per share. But this is not the price we should be looking for. We have to use a margin of safety. I use a 30% one, which allows me to be wrong in my estimates and still make a decent investment decision. Okay, so with the margin of safety, the prices we should be looking for should be somewhere between $88 and $132. And as we can see, the current share price of Class C, which is the share without the voting right, is $105. And Class A with the voting right is 104. So as we can see, the current price is lower than the high and medium scenario estimates. It's a bit higher than the low one, but it's not that much off. So we are really in the area in which we can consider buying Google. And what we get is a great company, as we can see from the fundamentals, at an interesting price. And as Warren Buffett says, he would like to buy great businesses at a fair price. And it doesn't mean that you should go and buy the company right now. But maybe it is a good idea to do your own due diligence, to get to know more about Google. And remember, this analysis that we do here, it should be treated only as the beginning of understanding a company, of actually knowing how it works, and then making your own decision about investing in it or not. So that's it for today. I hope you found this video interesting, and if so, then please like it and consider subscribing. It really helps the channel a lot. I would really, really appreciate it. Okay, so see you in the next one. Bye bye.